Good afternoon. This is Mike Maharrey. I'm the managing editor of SchiffGold News, the SchiffGold website. And boy, it's been a rough couple of days or a few days for gold and silver. As one of my friends put it, what did gold and silver know about Hillary Clinton? Because the metals have gotten killed over the last couple of days. Of course, they're not alone. So I thought I would just take a few minutes and talk a little bit about the big sell-off that we've seen over the last few days and what it kind of means and what we can kind of parse out of what is going on in the precious metals market right now. Now, we've had two big days of sell-off. The first was Monday. On Monday, we saw gold drop below $1,900 an ounce for a short time. But it did rebound and ended up closing, I think it was about $1,913 an ounce on Monday. And at the time, in a short video that I posted on Twitter and Instagram, I said that it seemed like that gold still had that good, strong support at 1,900. We kind of hit that level, it bounced back, and it was able to hold 1,900. Today, no such luck. The price dropped well below 1,900. And as I recorded the podcast, this isn't a podcast, but this live stream, it's at about 1963 an ounce. So we're well below, or 1863 an ounce, I'm sorry. So we're well below the that $1,900 support level. And silver has gotten similarly pummeled. Let's see, silver is at 2275 currently, and just to kind of put it into perspective, over the last couple of days, we've seen gold drop to a 2-month low and silver is at a 7-week low. So pretty tough couple of days. Now, granted, there's been a lot of other things selling off as well. We've also seen big drops in the stock markets on both of those days. In fact, today we've seen kind of across the board drop in the stocks. The Dow was down a little over 500 points. The NASDAQ was down over 3% today. So we're seeing some selling also in equity. So what in the world is going on? Well, really, when you boil it all down, all of this pretty much comes down to a strengthening dollar. The dollar index is at a 2-month high today. We've seen the strengthening dollar over the last several days. And if you listen to the mainstream financial news, the pundits are pretty much saying that this dollar strength is a result of a lot of things that are happening. Primarily, we're seeing an increase in COVID-19 cases, particularly in Europe, but also to some extent in some areas of the United States. This has raised concern that we might actually see another round of lockdowns. So there's a little bit of economic concern. So we're seeing a little bit of a repeat of the pattern we saw back in March, although to a much lesser degree. Well, virtually everything was selling off. People were rushing into dollars. Dollars were perceived or are perceived as kind of the safe haven if everything's kind of falling apart. Now, quite frankly, I think that the dollar's not the best safe haven in the world, but that tends to be the way people think. In fact, I would say that gold and silver are really your safe havens. But again, we saw this pattern back in March when the economic lockdowns were at their height. We saw both gold and silver sell off significantly before they rebounded as the Federal Reserve began pumping monetary stimulus into the system. And I really think that fundamentally, I think those are the things that you have to look at. The questions that are being raised right now are what does this big drop in gold and silver mean? I mean, we're down over $100 from what we were trading last week. We're far below that $2,000 mark that we hit a couple of times a couple of months ago. Is the gold bull run over? Are we looking at a prolonged period of falling prices? I don't think so. Because again, you always have to look at the fundamentals, and there are certain things that you would have to believe in order to think that the bull run for gold and silver are over. The first thing that you would have to believe is that the economic problems are over. And I think clearly they're not. I mean, just go back and look at the jobless numbers that we see on a weekly basis, the weekly unemployment numbers that come out every Thursday. Last week it was, I think it was 880,000 people applied for unemployment for the first time in a single week. Now, everybody said that was great news because it's under 1 million and, it's a lower number than what economists, that's a lot of people to file for unemployment in a single month. So it tells me that there is still a lot of weakness in the employment market. We still have tremendous amounts of debt in the system. We have a high level of subprime mortgage delinquency. So there are a lot of things in the economy that don't look good to me in the long run. I've said this on the podcast, on the Friday Gold Wraps podcast that I do every Friday. I've said this numerous occasions. I do think you're going to see some improvement in the economy, assuming that we don't get more economic lockdowns. But we will obviously see some improvement as the economies begin to open up again. But I think long term, there's tremendous damage that's been done to the economy. That's not going away anytime soon. And then there's the fact that the economy was in trouble even before we went through the pandemic. And I've been over this a number of times on live videos and also on the podcast. The fact that if you go back to 2019, we were already seeing interest rate cuts. We were already seeing the Federal Reserve engaging in quantitative easing. We were seeing these repo operations. That indicates that there were problems in the financial system even before the pandemic. So, I don't see the economy all of a sudden just healing itself and moving off into the wild blue yonder of greatness. So that's one thing I think we can set aside. I think the second thing that we really have to look at is the source of this dollar strength. To believe that the bull run for gold and silver is over, you also have to believe that the dollar is going to remain strong, that we're not going to see any kind of problem with the dollar moving into the future. Now, I wrote an article this morning for the SchiffGold website, schiffgold.com/news, outlining the most recent numbers we have on the increase of the money supply. The money supply is increasing right now at a record pace. It is increased at a record pace 5 months in a row. The Federal Reserve balance sheet is now around $7 trillion, which is 600% above its height at the height of the Great Recession in 2008. So, the amount of money that is being created is just almost unfathomable. And that fact alone tells you that we shouldn't have a lot of confidence in the dollar moving into the long run. The only way that you could really start to be optimistic about the dollar is if you actually believe that the Federal Reserve is going to start backing off of the extraordinary monetary policy that we've been seeing over the last several months. And there's certainly no sign of that. Now, it's interesting, if you go back to the Fed meeting last week, we had the FOMC meeting for September, wrapped up last Wednesday. And basically, Jerome Powell and the FOMC, they reaffirmed that things are going to continue as expected. We're going to continue to see interest rates at zero. In fact, they actually extended the timeline for that. They're now saying that we should expect 0% interest rates at least through 2023. That's a year longer than what they were saying back on the June meeting. And then they also said that they're going to continue doing quantitative easing at basically the same rate as they have. Oddly enough, though, that's not enough anymore. And if you listen to Peter Schiff a lot, you'll hear him use the analogy of the Federal Reserve is like a drug pusher and the markets are like a drug addict. And as you know, with a drug addict, they always need more and more of the drug. And I think that's certainly true in terms of this monetary stimulus. The current level is not enough. It's not stimulating enough. There was actually disappointment that Jerome Powell wasn't more dovish. Now, he was pretty darn dovish. But there's this idea that, it was almost a hawkish meeting because he wasn't as dovish as they would like to be. And so, again, if you really think that the dollar is going to remain strong, you have to believe that the Fed is pretty much done with QE. Now, there was an odd thing that happened that I'm seeing in almost all of the mainstream reporting about dollar strength and the gold sell-off. And that was Chicago Fed President Charles Evans. And he was out there saying that, hey, we could start raising interest rates again, even if inflation doesn't get to 2%. So he's kind of throwing a bucket of water on this whole idea of asymmetric inflation. and in this promise that Powell has said that they want to push inflation actually above 2% to make up for the time that it's been below 2%. And, Evans is kind of hinting, oh, we could raise interest rates before that. And so now, the markets are saying, oh my gosh, is the Fed going to raise interest rates? Look, the Fed is not going to raise interest rates. I mean, it's absurd. Just look at the level of debt that is in the economy right now. Wrote another article today about the levels of state and local debt. State debt is at, I can't remember the number now off the top of my head. I think it's like $1.4 trillion. In the States, the problem that they have is they don't have a printing press. They can't run to the Fed and get them to monetize their debt. So, they have to basically do creative accounting to pretend like their budgets are balanced. And then eventually they're going to have to run to the federal government for bailouts. And bailouts means more money printing from the Fed, more debt from the federal government. But the levels of debt are just absolutely staggering. Personal debt, corporate debt, obviously the national debt is through the wazoo. The budget deficit pushed above $3 trillion for the fiscal year 2020 with 1 month left remaining in the fiscal year. There's no way that the Federal Reserve is going to raise interest rates. They could not raise interest rates in 2018 when, we had much less debt, much smaller balance sheet. The Fed couldn't normalize. It tried. And then in 2018, the stock market began to crash and the Fed stepped in and it cut rates and, began increasing the balance sheet again. So this idea that the Fed is someday going to normalize and that all this is going to be over is absolutely absurd. And continued 0% interest rates, continued quantitative easing is bullish for gold and silver in the long run. It is inflation. As I said in an article this morning, you'll hear pundits say, oh, well, we don't really have an inflation problem. It's really only at, it's only at 2%. We have an inflation problem. Inflation is the increase in the money supply. It's not manifesting itself necessarily in price inflation right now in the official CPI. My contention is the official CPI is kind of a cooked number anyway, but the official CPI is still running cool. But ultimately, we do have inflation. It's just manifesting in different places. It's manifesting in the stock market. It's manifesting in the real estate market. It's pumping up more asset bubbles, keeping air in the asset bubbles. At some point, these bubbles will pop. Even if we never get price inflation, all of this money printing is still a problem, and it is still bullish for gold in the long term. So, two things so far that we've covered that you have to believe to think that the gold bull market is over. Number one, that the economy is going to spring back into, vibrant, robust beauty again. And number two, that the Federal Reserve is not going to continue with this extraordinary monetary policy, which I absolutely think it is. I'll take this one step farther. I think the Federal Reserve will actually up the monetary stimulus at some point in the not too far future. In fact, they're really pushing for that now. Jerome Powell's been on Capitol Hill this week. He's been pushing for more fiscal stimulus. He's consistently said we need more government spending. We need more fiscal stimulus. The Fed can't do it alone. And when he's calling for more fiscal stimulus, and Peter Schiff pointed this out the other day in his podcast, they're effectively calling for more monetary stimulus as well, because any money that is spent, any stimulus that is passed by Congress has to be borrowed. We're already borrowing at this tremendous rate anyway. We're not all of a sudden going to get this big revenue windfall at the federal government. So any money that is spent is going to be monetized by the Fed. That means more QE, more money printing, more debt monetization, and increase in monetary stimulus. Fiscal stimulus and monetary stimulus work hand in glove. So in effect, Jerome Powell is already calling for. But let's assume for a minute that Congress can't get the job done, that all of the crazy political situation that we have now, the Democrats and Republicans can't ever come together and figure out some kind of rational stimulus plan. I still think the Fed will ultimately step in and provide more monetary stimulus. And Powell is hinting at this. I want to read, this is just from, I think it was a Reuters report, but this is what Powell was saying in his testimony at Congress. The U.S. Congress and the Federal Reserve both need to, quote, stay with it in working to bolster economic recovery. Despite progress in rebounding from the coronavirus economic downturns, he said, quote, there is a long way to go. With millions still jobless compared to where the economy was in February. He said, we need to stay with it. The recovery will go faster if there is support coming from both Congress and the Fed. So we're nowhere near the end of this monetary stimulus. Again, this is bullish for gold. Final thing, I think, playing out in the long run, just looking at the geopolitical situation, this election is going to be insane, to say the least. We're already seeing hints of it. There have been threats of violence if President Trump appoints somebody to replace Ruth Bader Ginsburg. We had some, I haven't heard the specifics of what's going on in Louisville today with the Breonna Taylor situation, but from what I understand, it's not good. I think we're going to see more civil unrest. So there's a lot of uncertainty, a lot of regime uncertainty, as we would say. And this also, I think, long-term is bullish for gold. Fabian Gambino, he's one of the precious metal specialists over at SchiffGold. He's watching. He said election volatility will be interesting. Yeah, I think it absolutely is going to be interesting. And who knows what's going to happen. I initially thought that Biden would probably win. I'm not sure now. I think maybe the left has overplayed its hand with the protests, but who knows? And I think the real thing that's going to be interesting is I think no matter who wins, it's going to be a hotly contested election. We may get to January and still not know who won. So again, all of this to me is still bullish for gold. I'm not terribly concerned about the sell-off that we've seen over the last few days. I think it's been a correction. I think we're seeing this dollar strength again. I think we're seeing the concern and kind of a repeat of what we had in March at a smaller scale with kind of an everything sell-off. To me, this is a buying opportunity, and it might be a good time to take advantage of a low price in gold and silver that you may not see again for a while. That's purely speculation on my part, but I would definitely, I feel like this is a good time to consolidate your position in precious metals, not get worried about what's happened over the last couple of days. I always say this, I think it's extremely important to always look at the long-term trends. What is the Federal Reserve doing? What is the economy doing, big picture? What is the political dynamics, 6 months, 12 months down the road? Those are the things that I think that we want to look at as precious metals investors and not get too caught up in the emotions of the ups and downs of the market. So I think that kind of covers, again, there are certain things that you have to believe if you think the gold bull run is over, and that is that the economy is going to drastically improve and that the Federal Reserve is going to all of a sudden stop the monetary stimulus, and that political and socioeconomic turmoil is going to end. I don't see that happening anytime soon. So that's kind of a sum up, a wrap up of what's going on. I appreciate everybody that's tuned in, and I'm going to make a copy of this, put it on the YouTube channel as well, and hope everybody has a good rest of the week. Thank you.